Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is going to be the Monday strategy session. So today we're going to talk a little bit about the biggest stories of the day. We're also going to see maybe if we can identify a couple of trades, a couple of levels to hit later in the week. But what we've seen right now, I got to tell you guys, it's all about crypto. It's all about Bitcoin. Take a look at this. This was sort of a video that I put out on our YouTube channel. I'm going to show you that in just a second. But this bullish pennant on the monthly was as clear as day. You can see right there, you got a nice big run up, you got a little bit of rotation, and then you get sort of a stutter step. That's what I call a stutter step. You don't really get a true break, and then you get the true break. And I will tell you right now that is an absolutely huge move. If you are long Bitcoin, you're winning. So I definitely want to say hi to everybody out there first. But as far as technicals go, I don't think there's any question that Bitcoin's going to 100,000. I really don't. I mean, as soon as we broke out of that rotation right around 75,000, we were gone. We were gone. And once we broke big. So there's a couple of lessons there to be learned, and we're going to sort of go over that, and we're going to look at the news cycle here. I'm going to show you the video that we put out before the election that really, I think we nailed this one pretty well. I really do. So good to see everybody back in the room. Jay Ski, good to see you, Jay. Always a pleasure. Dibble, always a pleasure. Martin, let's see who else is in the house. JC's in the house. Bobby Bob, good to see everybody. I hope you guys had a great weekend. This is going to be a fascinating trading week because we talk a lot about, the fundamentals. We also talk about technicals, and then we get down to making trades and making a little bit of money. This is going to be a big week. Now, I think you're going to make more money this week than you did last week. And the reason why I say that is last week was an incredibly unique situation. I mean, it really was. I mean, we're talking about U.S. elections. We're talking about the Fed comes out. I was highly critical of the Fed. If you guys caught the FOMC meeting, I was all over Jay Powell. And the reason why was I thought it was a standoffish meeting. I thought that he was really drawing the line in the sand between him and the new administration. And boy, I think everybody needs to work together so we can get a global commerce. I think that's really what everybody's looking for. We want growth. We want success. And what I saw in that meeting was somebody that was definitely, I don't know that he was happy with the election results, but he definitely was on guard. I mean, they asked Jay Powell point blank. They said, hey, listen, if you're asked to step down, will you? No. Next question. Interesting. We're going into an interesting time, and any time there's any sort of uncertainty, whether it's the leadership of the Fed, whether it's geopolitical, strife, wars, terrorist attacks, all that stuff, you can, I hate to sound like a vulture, but you can make a lot of money from that uncertainty. So as long as we understand what's happening and understand that, okay, we have a technical device right here, we have a bullish pennant, and then we get the big market driver. What's the market driver? The election. That's what hybrid trading is all about. I'm a hybrid trader. Love my technicals. My technicals get me in. My fundamentals tell me when the market's going to move and when it's time to trade. So as long as I know what to trade, when to trade, the technicals tell me how to trade it. So we're going to go over some strategies today. I think it's going to be an interesting day. Let's see. Team Marina, good morning. How's it going? You guys make a little bit of money thus far today. I will say this, that if you bought Bitcoin, you did very well. As far as what I would do with Bitcoin right now, well, let's go down to a daily. For me, it's just buying pullbacks. I don't really see any way around buying the pullbacks. You'll notice right there, our key number 75,000. Compression, break. Boy, did we break. And we broke on a Sunday and we broke on a Monday. That's huge. For me, you can really trade Bitcoin on any time frame you like. I would treat it like a Forex pair, like a Forex major. I would look at it and say, okay, what gives me the best opportunity to get into some good market structure, a nice rotation? What I mean by rotation is good movement. Like let's say we go to trade the Euro USD on a 5-minute chart, which I'm going to show you here in a second. We had a Bollinger W come into play. That was absolutely fantastic. But if you're going to trade a market, you need to make sure there's enough movement and volatility. And what that basically means is your ranges on your pricing bars, your periodicity of your chart needs to be dialed in perfect. For me, I see Bitcoin like I see a Forex pair. It's traded all the time, 24 hours a day. There really isn't any, I wouldn't say there's any correlation to when the volume typically comes in. You can see right here, you'll notice that there was huge volumes here. And typically right around, somewhere right around the U.S. morning, maybe you get a little bit more volume. But I would just look at this and say, listen, 4-hour chart, keep it real simple. What are we doing? My weapon of choice is Fibonacci retracements. I know most of you are rolling your eyes right now because you've seen me do this 10,000 times. But realistically, 82.5, you're buying pullbacks. You're buying pullbacks until we get to 100,000. So if I'm trading Bitcoin and you're long, I would hold until I'm right up here, right about 100. Right now, you're in euphoric buying. This is tulip mania right now. And if, in fact, people keep buying it, which I don't see any reason why they won't, you're going to see a test of 100. We can step up on a derivatives contract or a CFD and maybe sell right up in here, maybe 99.5 or something. Take a short and really look to get a little 10%, not a 10% pullback, but maybe a few $1,000s on a pullback. That's doable. But as far as how you want to trade this, you want to trade it. You want to be long. You don't want to be short. You do not want to be short right now. Crypto. Why? New administration. New administration. You're going to see the end of Gary Gensler. Gensler's gone. I mean, they're going to fire him probably pronto. They're going to ask him to step down. This right here is just a nice little look at the Bitcoin sort of, I guess, saga on Coinbase. Coinbase is a great, CoinDesk. Coinbase is where I trade it. CoinDesk. Coindesk is a pretty darn good little website. They'll give you everything you need to know about crypto. They know a lot more about crypto than I do. And then a couple other things we want to cover here. We put this video out, and this is why we're starting with Bitcoin. We talked about crude oil, which we're going to talk about next. But right there, Bitcoin rally on a Trump win. We nailed that one. And you can see right there was our analysis. There was our pennant. There was our break. And you'll see that chart is a little more developed now. So the idea is if you know exactly what the next price bar is going to do, you can make a lot of money. I think we nailed that. Now, also, we talked about crude oil. Now, crude oil is another one of those trades that I think was, very, very, very good. I think that if you understood the dynamics of, if you understood the dynamics of what the crude oil market was going to do, a lot of folks could really have seen this sell-off coming. And if you could take a look at the dailies, that's a 4-hour chart. I don't recommend that for WTI crude oil. I really don't. U.S. oil. I don't think that's the best way to trade it. You always remember that when you're trading crude oil, the volume comes on the market at about 9 a.m. Eastern time, about 7 a.m. my time. So if you're going to trade crude, about 7 through about 11, 12 o'clock my time, you got about a 5-hour window in there from about 9 to 3, I guess, or 2, somewhere right around 2. That's when you want to trade crude oil. Now, if you find yourself trading crude oil during the overnight, understand the market is thin. It's very, very thin. And what that means is you can get a big sweep of action in there, and they can sweep the market higher or lower. This is relatively routine. We knew eventually after the election, we talked a lot about it, and we talked about crude oil being bearish if, in fact, Donald Trump won. And it looks to me like it's going to be a clean sweep. It's going to be Republicans in the White House, the Senate, and the House of Representatives. Right now, the House of Representatives are still counting votes. There's a lot of problems there. There's going to be legal challenges. That may drag out, but it looks to me like this was a landslide type of a victory that no one really saw coming. A lot of folks will say they saw it coming, but they also would say, I kind of hope it happens. And the reason why was after the 2020 election where we just really, there were so many questions, guys. There were so many questions. This was a landslide. Don't get it twisted. And now our markets are reacting. So right now, you're seeing a little bit of pride, I guess, from the bidders hitting the Dow Jones. I mean, the Dow just keeps going up, 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 and up. And look at your commodities. Gold's off. Silver's off. I mean, if I was a silver broker right now, I wouldn't feel very good. You're back down to 30. It looks like silver's probably going to settle down around that 30 level for a while. Crude oil is the same. You talk about maybe the U.S. dollar is going to get stronger. There's been a lot of critiques about that. They're saying, hey, listen, tariffs, tax cuts, what's that going to mean? Take a look at what the U.S. dollar is doing right now. Go back and watch FOMC Live last Thursday. I was hard on Jay Powell. I was hard on him. But he basically signaled that they were going to stop the rate cuts. And if you could read between the lines, and if any of you played poker at all, you could see it all over his face. And he said, yeah, well, that we were going to go that way, but now we're rethinking our thing. What do you mean you're rethinking? You're rethinking your policy? Yeah. Okay, so what you're seeing now is the market's dealing with that. And the U.S. dollar's up another, 0.5% today? We're up at 105.50? All of a sudden, the DXY is trending? You're kidding me, right? In a rate cut cycle? Wow. I mean, these are crazy times. In any case, right here, U.S. oil. What does a stronger dollar mean for commodities? It means commodity prices go down. Why? Because the dollar in my hand is worth more than potentially some of those commodities, bird in the hand type of a thing. Some of those commodities, it's going to take less of my dollars to buy them. Prices going down. Okay. WTI crude oil, right now you want to be a seller. There's no question about it. You've seen the big move down last weekend, last Friday was about 2.5%. Today is another 3%. We're cratering. So if you're going to buy crude oil, you can certainly do that. But just take a good look at the charts. I mean, markets have memories. There's your low. There's your low. There's your low. I mean, if you wanted to draw a trend line, I mean, I don't really care for this long-term trend line like this, but something like that. You want to be a buyer? You need to be a buyer down here right around 67, 67, somewhere in there. Now, if you can buy down there, you're going to make a little bit of money. If you can't buy now, if you can't buy until then, you're going to be in good shape. If you buy now, you're going to get into trouble. So if I was actually trading this intraday, I don't usually trade Mondays. I like to be very conservative on my Mondays. I don't like going into a hole. Remember our psychology. Monday, what are you going to do? Preserve your capital, take small profits, get ready for Tuesday, Wednesday, Thursday. That's when I want to go pedal to the metal. That's when I want to bet the money. Right now, this is a really tough chart to attack, guys. I'm not going to lie to you. That's a big-time sell-off during the overnight. That's a London session. Then you get a little bit of compression right there. There's your opening bell. Not opening bell on Wall Street, but your traditional pit open, 9 a.m. Eastern. And then bang, you're going sideways, and then you get the big sell-off. And what are you doing? We're going sideways. If I was going to trade right now, I would definitely be short. I really don't think you can go wrong being short. It's ugly, though. This is a lot of overlap, and what I mean by overlap is just we're sort of a value area. Let's turn a TPO chart on right here. I know a lot of you. I had a lot of interest. I used time price offering charts in a live stream a while back, and it's advanced. When we start talking about volume and TPOs and point of controls, it's very advanced trading. But this is sort of how I was brought up. That's how I was brought into the game. I remember my first day on the job, I was handed this giant, I still have it, this giant 3-ring binder. It was full of Stadelmeyer market profile stuff. And he goes, I remember my uncle, he just threw it at me. He said, read it. He goes, read it, take notes. So I read it, and it was all about, basically, it was about markets running and rotating. 500 pages of it. I went, well, this is sort of out there. And it's just all market theory, but what it is a market runs, there's your run, there's your rotate. See that white line right there? That's called our point of control. So if we look at our point of control, what's our point of control? Is about 68.18. We got a 38% Fibonacci at 68.24. What do you want to do? Do you want to be long or short? Right now, we don't see any reason to not be short. So what I would do is step up to the plate, sell the market. We're going to go ahead and let this thing simmer during this live stream. Now, remember, if you're doing this on a U.S. oil contract, that's fantastic. Just remember, you're going to have that spread. So right now, every time you place a trade, you're already behind on the ledger. So let's go over to December WTI futures. What do you got? Same basic thing, guys. I mean, it's the same basic look at the market right there. Is our spike high. We're going to go ahead and we're going to Fibonacci that spike high to this spike low. And then you're going to get something like this. Point of control is where? About 68.23. I'm going to go ahead and sell it again. Now, I'm not going to do 1 unit, so we're going to go ahead and do 4 units because typically I trade 4s. Okay? Remember, these are demo dollars. So, you don't necessarily need to follow these trades, but I will full disclosure when it's time to trade real money, I'll tell you, and we'll trade real money. We've done it on the live streams before, but right there, think about what you have there. You have a negative market dynamic, you have compression, and then what do you have? You're beneath 38%. That tells us that we're still trending a little bit to the south. We can see the broader market condition is bearish. So we're not necessarily trying to do anything that's going to, we're not trying to say, okay, I'm picking the bottom, I'm picking the top. No, we're just following the pressure. Now, if we take that short, we understand that point of control is absolutely huge. Now, we're making money right now, and that always feels good, guys. It really does. But bigger picture, are we going higher or lower on the day? I genuinely don't know. I know there's a lot of bidders dug in right here at 68. Everybody bought this thing at 68, but it's been a hell of a fight. It's been trench warfare to try to protect 68. Once 68 goes, where do we go? Where does this market go? I think we all know where it goes. No question about it. And that's where your long-term stuff comes in. I'm going to go ahead and turn the TPO charts off. If you guys have any questions about TPO and market profile, feel free to ask me. Just send me a private message. I'm more than happy to delve into that. That's some complex stuff. I don't typically cover it on the live streams because it really is hard. There's a lot of nuance involved, and there's a lot of timing issues that can make things very, very difficult. So remember this, and this was sort of something that we put out there on one of our videos, actually. This video right here. This is Forex Signals TV. We have 2 YouTube channels. Check out Forex Signals TV. Check out Howtotrade TV. But right there, Election Day, crude oil outlook. And we talked a lot about, well, who's going to win, what's going to happen. If Trump wins, it's bearish, and that's exactly what's happening now. So if you do look at this monthly chart, I want everybody to sort of say, okay, what is the broader market doing? You're not going to find these levels anywhere. Nobody on CNBC is talking about it. It's embarrassing, especially if you're talking WTI. That's the biggest level in the world right there. Now, listen, I'm painting with broad strokes. I don't know the exact high or the exact low of these things, but I do know that you need to start right around negative 40. Go ahead and run some Google searches. It'll give you the exact low of where WTI crude oil was right after the COVID panic. Get down in there, check it out. It's right around negative $40 a barrel. No one in finance is saying this, and they're making the biggest mistake that I've ever seen. Everybody's sort of running their analysis off of zero. Believe me, the institutional traders are looking at this. We put a video out called Beat the Market Maker a while back. The market makers are looking at this market structure, and instead of pricing from zero, they're pricing from negative 40. That means that the drawdown is going to be a little bit heavier than if you were at zero. Look, if you were running your Fibonacci's from zero, we're in about the 50% range. No, you're not either. You're still incredibly bullish. This market falls apart underneath 64.50. It falls apart. So what I'm looking at right now is this triple bottom that you see on the monthly, bang, bang, bang. And then you hit it again. Now we've got compression. Trump won. That's your macro market driver. This market's going to explode to the downside. Now, I can't tell you when to sell it. That's not legal, I don't think. I will say right now that I'm on the short side of it. This right here scares me. It's going to be a lot of institutional bidders there at 64.50. A lot of them. Once we break, that's going to be a party. It's going to be a party all the way down to the low 50s, more than likely. So that's what I'm looking at. I will give a shout out to the powerful Connor Woods. He put a video out on our YouTube channel. I believe it was on the it was on the Forex Signals YouTube. This is our How to Trade YouTube channel. Be sure to check this out. He had a real good video there, inverse fair value gaps. Not many people have seen it. You need to go over there and check it out. And we also got all the moving average stuff you could ever want. But this inversion fair value gaps, if you're a smart money concept trader, get over there and check it out. In any case, Connor made a hell of a call last January. He said crude oil is going to close the year down in the 60s, maybe high 50s. And I said, no way. It's not going to happen. It looks like he's going to be right. This market has every potential to fall apart here in the next 30 days. If I'm trading crude oil, I don't want to be long. Market driver, the election, that's the big one. So take a look at some of these trade ideas and market calls we make. I think some of them are pretty good. Some of them, honestly, most of them, our numbers don't come into play maybe as often as they should on a 1 minute chart or something like that. We're going to do some of that right now, but pretty fascinating stuff. If you do look at some of these market calls, they're very good. But right now, we're holding shorts in WTI crude, and we're not scared to do it. That's just the way it is. All right, guys, I got a ton of questions here. I'm sorry I got way behind, but I wanted to talk a little crude oil. I get that question almost every single day. And we're going to look at a little bit of gold right now as well. Just a staggering pullback on the gold chart. Look at that. Big time retracement thus far in November, about 5%. All right, let's see. Jay Ski, Putin, Hamas leaders have already said they want to come negotiating table for peace. Yep. Well, we thought that was going to happen. I think that, at the risk of being thrown off of YouTube, I'll just go ahead and say it. The money to the Ukraine is going to be limited. It's already been said. I think the negotiations are already done, Jay. I think that it was a simple phone call to world leaders, and they said, listen, we're not going to go much further with this. We're going to go ahead and craft a deal. That being said, it's not lost on me what's really been spent there money-wise, but the money's one thing, but the humanitarian cost and the lives in the Ukraine region, if you're there, if you're in that region, and you're a citizen, the hearts go out to you. Nobody wants to see this, and quite frankly, the United States, I won't speak for the entire country because, some people agree with me, some people don't. But I'll tell you that I think everybody's tired of war. We can't figure out why we're still having wars. And I think those things are going to wind down relatively quickly because the money's going to stop. And I don't say that as sort of a passing fancy. My family have all been in the military. I was the first one that wasn't. My dad fought, my grandfathers fought, my uncles fought, they all fought. And they all told me the same thing. They said, go to college and be a baseball player, stay in school. Today's Veterans Day, and it's Veterans Day in the United States. And I will say that if you're a active military watching this, or if you're a retired military, really thank you for your service. And I sort of expand Veterans Day. I know it's just in the United States, but I expand it all over the world because You know, there's a lot of folks that just like to fight, and no matter what, they're always going to fight. There's also a lot of folks that don't want to fight. They want to be peaceful, and they fight, and they make sacrifices for other people. And to those folks, I don't like troublemakers. Never have. My family hasn't either. Taught me not to be a troublemaker. I don't like troublemakers. But anybody that goes and fights for a better day tomorrow, really don't care what country you're in. A lot of respect. And today is a day of sort of reflection here in the United States, at least for my family. I'll be speaking with all of them today and giving thanks, because that's really a lot of it's really tough what they had to do. So if you're watching this and you are active military or retired military, I want to give you a sincere thank you from Western Montana, southwestern Montana. What you guys did, can't be overstated enough. A lot of really deep appreciation. And I'm not gonna choke up here on live stream, but there's a couple days of the year that are very important to me. Definitely. Let me see. Would you buy gold? Sure. When you buy pullbacks, do you set the pending orders to hit that 38% or wait until it hits that and then to make entry? Yeah, let's go ahead and run through it. So what I would do right now, if I was trading gold, I can kill two birds with one stone. If you're looking, in fact, to get long this market and you want to get in there, I think it's the right thing to do. However, we are seeing some selling. Now, there's a couple of levels that I would be hyper aggressive with. Or excuse me, I would make damn sure that I knew where they were. And yes, last month's low, 26-ish. We're probably going to wash that out. Okay, it looks to me like we're going to wash that out. Now, what's going to happen there is you're probably going to get potentially a gap down. You're going to get the market really to run hard, maybe even to 2,500. It could happen. Now, I can't really advise you to hold shorts. We could build a short trade for you here if you'd like. But the bigger picture, spike low back there in February, spike high. So what essentially are we looking to do here? I would love to buy the 38% pullback of this year's range. I would love it. You make big money down there. Big money. 24.81, maybe 24.85. So to answer your question, Jay, when would I buy? Very, very simple. All we're doing with Fibonacci's is we're measuring the move, and we're trying to get in on the retracement with pressure. This is clear cut as day. So if I was going to enter here, I don't want to miss the trade. So would I look at this chart, and remember, we're flying off the cuff here. Highs and lows aren't exact. If you're going to trade these, make sure you dial in the exact coordinates. I don't know your broker. I don't know what chart you're looking at, but this is spot gold, according to Forex.com, one of the biggest brokers in the world. I'm not doing an advertisement for them. If you want to trade, go over to Switch. Get over to Switch Markets. But right here, 24.81. All right. Where do I want to go in at? Well, I can wait for 24.81.36. Should I? No. If you wait exactly for that level, typically what can happen is you'll get a little bit of compression right in front of it and then potentially lose the trade that was a winner. So right here, if I'm looking to trade 24.81, I'm probably buying 85s. Now, the reason why I would buy 85, somewhere right up in here, I wouldn't buy 25s. I would wait for 2,500 to get taken out, but definitely looking right around 85s. The reason why I would do that is because I want to make sure that I get in on this market structure. So this is sort of an in-depth topic, Jay, but a great question for a Monday strategy session. Typically what you'll see is we got a key level, support zone. All that support zone means is we're going to get bidders there. It's going to attract somebody's attention. Somebody's going to look at the chart and go, yeah, gold's on sale. Well, we want to join that. The problem is where are they going to buy? They're going to buy here. They're going to buy here. They're going to buy here. Typically what happens off of these levels is you'll see big penetration towards the zone. And then you'll see a bunch of trading right in front of the zone. Now what happens here, and that's a little sloppy, but what happens is as that market moves sideways, get my fibbies back up there, but as the market moves sideways, pressure is being generated in the market, meaning buyers and sellers are duking it out. Now one of two things is going to happen. Number one, it could reverse and head back with the prevailing trend, which is awesome. That's what we're trying to do. Or number two, it could compress and then break down and threaten this trend. The second scenario means that we're a loser. We don't want to be involved in that. We want to work with the pressure. In order to do that, you're going to have to go in a few bucks ahead of your entry typically. Now, if we're trading a 30-minute WTI crude oil chart, I'm going to probably shade my Fibonacci's, my support and resistance levels by a few ticks. But if we're trading a monthly gold chart, I don't want to miss that move. I'm probably buying 85s. So if I'm going to go in up there, what do I have to do to my leverage to make sure that this is a reasonable trade? I have to dial down my position size and look for a bit of a bigger move. I'll be real honest with you. If we get a retracement down there to 24.85-ish, we should hit that for 10 or 15 bucks. I mean, that's a winner chicken dinner. Ring the bell. That's a lot of fun is what that is. So, Shane, you're looking at monthly charts. I want to trade right now. I hear you. Listen, I hear you. Let's go right down to a 4-hour chart here on gold. I like the 4-hour chart on gold. That gives us pretty good market structure. As you can see, we smoked that little demand zone right there. Bang. Nice little retracement. And then we took it out in a big way in the last 4 hours. You want to sell right now. There's no question about it. On short time frames, you want to sell. Now, I gave you a macro level to buy this thing. You're going to be okay if you do that. But if you want to trade right now, sell it. 30-minute chart, what do you got? You got a tumbler during the overnight, and now you sort of have that rotation right now. This is what I call a vintage L formation. Bang, run and rotate. It's an L, like the capital letter L. What does that mean? It means we're in incredibly bearish market conditions. What should we do? We should sell. Do we sell right now? Nobody gets rich selling bottoms, and nobody gets rich buying tops. Trade location makes you better than the next guy or gal. You need to see a retracement. So if you're serious about trading WTI, or excuse me, if you're WTI gold, whatever, charts are all the same, right? That's so not true. If you want to sell gold, don't do it right now. You got to wait for a retracement. 26.35. If you want to sell maybe something up in there, I'm in. I'll dig that. I'll sign off on that. If you sell right now, I think I'm going to fire you. You're fired. I mean, you really are, because you're selling the bottom of the day's range. That's not good enough. Let me do one more check and see if it's still a good idea to sell here. There's your day. Okay. This little gauge down here, that's my ADR. It's an average daily range. I use a 13 periodicity. Gives me a good idea of exactly how much range we can expect out of a commodity or a futures contract or whatever for a given session. You always go to the day to the left, meaning you don't use the current ADR. The current ADR, they're still factoring in today's range. I want to know exactly what we expected when we started trading today. I don't care about today's price data in this calculation. ADR, average daily range, 13 periodicity. We're looking at about $39.21, so about $39 would be a projected range today. Well, what's our high today? Our high today is up there at about 26.86, so 39 off of that. 39 off of 86 is going to be what? 47, something like that. Yeah, that's right, 47. 26.10. We're already in, guys. You got about 76. You got about $76 a range in. We're looking for about 39. We have about twice our daily range in right now. Don't sell it. Okay, so is it a buy yet? I mean, you can buy it if you want, but why? Maybe the trend ends. Maybe it doesn't. Step back to those longer time frames. That monthly chart on gold, probably gonna have a trade idea coming out here relatively soon. I know I have a written piece coming out tomorrow that's going to be on gold, but spike low, spike high, 24.81. That's where I want to be a bidder. A lot of confidence in that level. A lot of confidence. So let me see right here. Would you buy gold now on the hourly? It seems to be at support. No, I wouldn't buy it. If you want to buy it, listen, if you want to buy it, you can do it. I'm not going to sit here and say don't buy gold right now, because you really could pick the bottom. You could. The real question is, do you want to be a hero and catch a falling knife? A lot of money catching falling knives as long as you don't cut your fingers off. If you buy right now, your rotation should be up to right around a 38%. I want to be on the sell side of the market, guys. I just don't. I don't have any intention. We're outside of the lower Bollinger Band. We're sort of creeping back in. We potentially could get a Bollinger W to set up. That would be great. So that's where you got a low there, and then a pullback, then a second low, and then we can look at buying. I'd be into that, but that's a real challenge. All right, we got a few other things to look at here. I'm already running way long, but it was a good day to sort of strategize. Sell. Do we want to sell the market? NASDAQ, sell. You guys remember this from last week? Triple moving average trader. Take a look at it. Right there on the 5-minute chart. The 9 crosses the 20. Price is below all 3 of those moving averages. And boy, howdy, did you make a little bit of money on that trade. It's absolutely fantastic. Absolutely fantastic. Euro USD, Bollinger W. Okay? What happened? This is good stuff, guys. Right there. There was your first low. The second low violated the W. And these are things that we cover in our trading academy. If you haven't ever stopped by Howtotrade, do it. We've got a trading academy with all these strategies in there. Bam. There's your low. There's your pullback. There's your second low. Boom, boom. Where's my entry? Big green candle right there. And how are you doing? Market's moving north. That's a textbook Bollinger W right there. No question about it. Take a look at it. Bang. First low outside of the lower Bollinger Band. Pull back. Second low is inside of the lower Bollinger Band. And then you just sort of moved higher. When did we enter? We didn't buy here. We didn't buy there. We bought on the first big green candle. That was our confirmation. And you really should have already taken your money. I mean, that rotation right there is right up into the top of that pullback or the top of that bullish market structure. That's pretty good stuff. That's pretty good stuff right there. All right, let me see right here. We got another question coming in from T. Marina Tucker. T. Marina, how you doing? Shane, how do you ever reach a plateau in your profits? If so, how to overcome? Is it ideal to restart your trading back to zero? What a question. I'm going to tell you guys exactly how I do it. And most, like if you go on YouTube and you see the folks driving the Ferraris, or there's one young lady I follow. I get a kick out of her. I think she's a pretty good trader, but it's all production. Everything's produced. It's product placement. They're drinking a certain type of water and selling Porsches and moving to New York City. I like her though. I think she's a pretty good trader. I'm going to tell you how I do it. I look to make a certain amount every week, and I show up with X amount in my trading account. I'll be real honest with you. I don't trust brokerages. I don't trust much of anybody in this world. I trust my wife and my dad. That's about it. I don't let the brokerages hold a lot of my money. So let's say I have, just for the sake of argument, let's say I have $100,000 to trade with. I wouldn't feel very good if I let the brokers hold more than maybe 10,000 of it, maybe 15,000 tops. Now, when I trade and I scalp and I go in there, you all know me, you know my philosophy. Protect my money on Fridays, get momentum going on Mondays. I go pedal to the metal Tuesday, Wednesday, Thursday. I look to make a fixed amount of money every week, trade my futures accounts. That's my goal. Now, with ACH transactions, you just withdraw it. So I see it as a paycheck. So when I roll into Friday, I should have already paid myself. Typically Thursday afternoon is when I request my withdrawal. Now, let's just say, and I'm not talking actual numbers, but let's just say I have 10,000 in my trading account. I'm looking to make at least $1,000 a week trading on that account. Typically Thursday afternoon, it's ACH time. And I say, take my money out of there. So I want whatever I made this week, that's my wage. I want it out, and I want it out now. And typically that happens the next day. So you're looking to get an ACH transfer by maybe noon on a Thursday, and the money hits your bank account, maybe Friday, maybe Monday, depends on the day. But that's how I do it. So when you're asking me, do you ever reach a plateau in your profits? I don't think about it like a profit curve. I don't, okay, we want to be a 45 and we always want to be going up and going up. I don't look at the charts. I don't look at performance. I like money. I mean, I hate to be that guy, but I mean, I bet on football all weekend. That's what I like to do for fun. The biggest thing, if you're going to speculate, is just don't get into trouble. Watch your risk. Always make sure if you're going to risk this, you get that back. If you do that, you're going to be just fine. I see the systemic risk as being very, very important to factor in. Now, I'm not telling everybody to manage the money the way that I do. But when you ask me if I hit a plateau, no, there is no plateau. It's money every week. Do you ever lose? I've had losing weeks, of course. But that's the biggest thing in this game is to make sure that you're not trading higher leverage and taking greater risk when you're losing. When you're winning is when you want to pile on the leverage. And you'll find if you do that, you're not going to have plateaus. I'm not going to sit here and try to BS anybody about being Warren Buffett or any of these people. I'm not a rich person. I'm not. I'm a retail trader just like all of you. But what I've figured out over the years is, that's a revenue stream. That's a revenue stream. That's a revenue stream. That's what this is all about. And if you're serious about sitting in front of, if you're trading on your phone or these big screens like I got and you're sitting in your office, if you're serious about living this life, it can be very, very lonely. You need to make sure that whatever time you're putting into this, you're getting rewarded for, because nobody's going to pat you on the back. Nobody's going to rub your shoulders when you have a hard day. Nobody's going to say, oh, well, if you would have done this, you'd have been fine. Or, oh, you're on the right track. You're not going to get that as a trader. What you're going to get is a bunch of people that work 9 to 5s, and they're watching you, and they're saying, well, you're trying just to rip the system off. What do you do? I go, no, this is a revenue stream. Think of trading as a revenue stream. Don't think about it as anything else. That's what I was taught. The screens are an ATM. The market's an ATM. Show up and take the money out of it. Now, what you do with the money is your business. There's no judgment here. I don't care. Go buy a car. Go buy a house. Whatever. But it's important that we win. And there's a lot of folks that get stuck in that losing trap where they're always losing. And typically that's because they're over trading or they're trading for a different reason. I want to be very clear. I trade for money. I trade to make money. Don't trade to be driving around Porsches and stuff on YouTube and showing off. We trade for money. And I've had an opportunity with Howtotrade here for the last several years to pass along some of my knowledge and also enlighten you guys on some other strategies and things that we like to put out there just to get everybody thinking. And I've had an opportunity really to go in front of the world and sort of talk about what I've dedicated my life to. I get tired of a lot of folks that don't have the proper psychology for this business. You can do this and you can make a lot of money doing it. Money shouldn't change you. The money should not change you. You should be trading to trade. Trade to be a great trader, and you're going to be a great trader. You're going to be just fine. I don't care what strategy you use. Triple crossovers, Fibonacci's, who cares? Doesn't matter. What about the Dow? Well, let's take a look at the Dow Jones Industrial. Right now, since the election, tremendous amount of money has been made. That's a 5-minute chart on the Dow. What happened today? We gapped open. Why did we gap open? Because it looks like the Republicans are going to hold on and secure the House. This is more election stuff. This stuff's going to fade away as we get deeper and deeper into this trading year. It's almost over. I really only give us about another 3 weeks this year. We'll go the next 2 weeks. And then after Thanksgiving, it's sort of dead. And then we'll trade hard the first week of December. And then after that, we're going to shut down the afterburners. We're going to put up the Christmas tree, or if you don't celebrate Christmas, get out the eggnog, whatever. And then we're going to take it easy, because when we go into Q1 next year, it's, it's guns up. It's time to trade. So the people that are making a lot of money right now bought in. They're buying stocks up. They're snapping them up in the anticipation of Trump policies driving the markets higher. I don't believe that that's correct. And the reason why I don't believe that's correct is because we're going to see a shift in the interest rate dynamic. 37 days. I'll have the next FOMC live for you. But there's a lot of questions about if you're going to get that other rate cut. Right now, we're hanging out at 450 to 475. There's a 35% chance that we hold firm. There's a 65% chance right now that we cut interest rates. What do you think happens if we don't cut rates to this chart right here? Boom. The markets don't just crash, they crash big. So on the one hand, you got Bitcoin, you got all this stuff just rallying. Commodities, all of a sudden, everybody's okay. Gold's coming back. Silver's coming back. Nobody really wants the safe havens anymore. Look at the Swiss franc. Swiss franc's getting destroyed today. Off about 50.5%. That's a huge move for the Swissy. Let's pull up a daily here. See if we have a trade maybe. You can see exactly where the war was fought. It was down there right around 85. A bit of buyers and sellers. The buyers won. Something like this, if you're serious about trading a 4x pair, Dial this thing down to a 4-hour. That's clear as day. Wherever this top comes in, bang, bang, you're buying. Why are you buying? It's a pure Elliott wave count. Bang. There's your 1. There's your 2. There's your 3. Your next pullback will be a 4 and then a 5. Right now you go against safe havens. Buy the dip in the gold. If you get a pullback here on a 4-hour chart, that's a pretty solid intraday trade. Going into CPI, we'll see exactly what happens with our inflation numbers, but that's a pretty good trade for early in the week. I'll be looking at the Swissy closely just because I don't want to be leveraged necessarily for or against safe havens, meaning you don't necessarily want to buy gold or silver just yet. You want to wait for those big pullbacks. The same with the Swiss franc. That is a clear-cut Elliott wave. Bang, 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 bang. If it comes our way, we're looking to get in on that 4. That 4 pulls back, bang, we're looking to get the 5. That's all there is to it. All right, everybody, so much for a soft landing, Jay. Yeah, I don't think so. T. Marina, nice. Thank you so much. You absolutely bet. Wow, what a webinar. We really need a lot of this psychology at Coach Shane. Thank you, Bobby Bob. I sure appreciate it. I really do want to say thank you for showing up all these days and weeks. So I really do appreciate it. All right, everybody, I'm going to go ahead and sign off here for a while. My hair is a little froed out. It was a interesting Monday. I think that we're seeing just an absolute light show. If you are long crypto, if you had the foresight to buy crypto, I really am tipping my hat. I think that, well, if you bought crypto, you nailed it. Nothing wrong with that. No, I had a lot of fun today. I sure appreciate it, guys. Anything you want to know, pull by. Stop by the Howtotrade trading room. Send me a private message. I'll be sure to get back to you. I got to be honest with you. I have a stack of messages in there, so I'm going to get back to those right after that. Dibble, absolutely Dibble. I'm going to go ahead and sign off for now. We're going to have a trade idea coming out here in about the next hour or so. I will get you private messages as soon as I can. Stop by our YouTube channels. Check out that inverse fair value gap video that Connor put out Friday. It's a good one. You're going to want to see it. All right, everybody. Thanks for coming by today. We ran a little bit long, but that's okay. You guys have a fantastic trading day, a great week. Trade the market well, and we'll talk soon. See you.